the value of a business, unless it's a highly levered, very economically sensitive company, is not particularly affected by the by the event of a recession, right? If you own the value of a stock, right, the value of an interest in a company, it's the present value of the cash that business generates over its life. And if it's a business that should exist forever, I'll pick Hilton, for example, we can expect that in past history, there's been a recession every 7 or 8 years. Let's assume the future is the same, and there's a recession every 7 or 8 years going forward. That's kind of factored into the value of the enterprise. The only reason why a recession destroys value is if you have a company that is highly levered, and then if revenues decline, their cash flow goes negative and they can't support their debt and they go bankrupt, right? But if you own a very well capitalized business, I don't think a recession has a meaningful impact. It might affect that year's revenues and cash flow, but that's just one line item in a long spreadsheet of cash flows that you discount, if you will, into the present. We have a much larger number of unpaying, i.e. people who share passwords than we thought, or than we at least disclosed previously. This is causing us to reassess our business model. We're going to go to, an advertising model. And while we have enormous confidence in a management team that's done a fantastic job over many, many years, it's a completely new approach to their business. And I think for us, it made the future difficult to predict in terms of the future, what's going to happen. And we're a very concentrated investor. We put a large amount of capital in each commitment. We want these to be things that we can predict with a high degree of confidence over a long period of time. And Netflix became, if you will, unpredictable for us. So we sold it. We sold it around $225 a share. No, $275 a share. Actually, I don't remember a precise exit price. It's trading above the price we exited, but that doesn't mean it wasn't the right decision to exit for us. An investor who owns 100 stocks, there's a place for Netflix. An investor who owns 9 or 10, in light of the uncertainty created by the changes in how they're going to approach their market, we felt it was not something that could fit into our portfolio. In general, we like to own things for the long term. On Domino's, we actually made a profitable investment over the course of the year. Our original holding period intention was not a year, but the world changed in a pretty dramatic way. One, got a lot more difficult to get labor, a lot more difficult to find drivers, much higher interest rate environment. And the combination of those factors and the valuation that when we sold made it, in our view, just a less attractive opportunity. We'd rather deploy the cash elsewhere. So we put our capital in 2 places. One, we launched one of the more aggressive buyback programs out there. We're buying in about 1.5 million shares, approaching about 0.75% of our shares outstanding every month. That's a pretty aggressive program. It's about 28% of the average shares outstanding. We think that's the easiest investment that we can make right now. One, we're well capitalized, plenty of cash on hand. 2, we're trading at, as you know, a 35% discount to NAV. 3, our companies are trading at, in our view, deep discounts to their intrinsic values. You get the benefit of that double discount. So we think that's been a good place to deploy capital. The other place we've been deploying capital is some of these sort of more opportunistic hedges. We're investing a relatively small, maybe 1, 2, 2.5% of our capital in each of these various commitments, together comprising at cost, 5 or 6% of our capital, but investments where we can make 6x, 8x, 10x, and sometimes more. That seems a better use of capital for our marginal dollar than the next big equity commitment. And we've looked at, and a couple of things have come closer to prices where we would own them, but stocks haven't really gotten cheap enough for us to take our last dollar and buy the next big commitment.